What if I told you that with just a few simple tools, you could predict market trends and make smarter investment decisions? No more confusion, no more guesswork. In the next few minutes, I'm going to break down everything you need to know about technical analysis so you can become a pro at reading the market. Hey everyone! Welcome to this video on technical analysis. Whether you're new to trading or you've been at it for a while, technical analysis is one of the most powerful tools to understand price movements in any market: stocks, crypto, Forex, you name it. And the best part, it's not as complicated as you think. By the end of this video, you'll have everything you need to start using technical analysis to your advantage. Let's start with the basics. Technical analysis is simply the study of past market data, primarily price and volume, to forecast future price movements. Unlike fundamental analysis, which looks at things like company earnings or economic conditions, technical analysis focuses purely on the chart. Why? Because the market already reflects all information in the price. It's like looking at a map that shows you exactly where the market is headed. The chart is your playground. This is where all the magic happens. It shows the price of an asset over time. The most common chart is the candlestick chart. Each candlestick represents a specific time period, whether it's minutes, hours, or days, and it shows you the opening, closing, high, and low prices during that time. These candlesticks help you identify patterns that predict future price movements. Support and resistance levels are crucial. Support is the price level where an asset tends to find buying interest, preventing the price from falling further. Resistance is the opposite. It's where selling pressure kicks in and prevents the price from rising. These levels act like invisible barriers, and understanding them helps you identify potential entry and exit points. The MACD is another important indicator that helps you identify trends and reversals. It shows the relationship between two moving averages, usually the 12-day and 26-day EMAs. When the MACD crosses above the signal line, it could be a sign to buy. When it crosses below, it might be time to sell. To sum it up, technical analysis is a vital skill for anyone looking to trade or invest. With the right tools: charts, support and resistance levels, moving averages, RSI, and MACD, you'll be able to spot trends and make smarter, more confident decisions. Just remember, practice makes perfect, so keep analyzing, learning, and improving. If you found this video helpful, don't forget to hit that like button, subscribe to the channel, and turn on notifications so you never miss out on more tips and strategies to level up your trading. Leave a comment if you have any questions or if you want me to cover any specific topics in future videos.